All right, this is our teaching session with Elijah, Anthony, and Carlos. So right now we have our TD Ameritrade screen open, and the first thing we want to do is take a look at trade. And we're going to go to, first thing we're going to look at is how an options chain works. I think that should be the first thing. What do you think, Anthony?
Yeah, exactly. That's
Okay.
that's where we start.
All right, so right here at TD Ameritrade Thinkorswim, this is a live account. You see everything live. We went ahead and put Apple, made it easy for everybody just to put Apple. And this is our options chain, and we can pick the date of expiry. This is the date of when those contracts will be expired. So let's go ahead and break down what exactly are options and how does it work. So I'm going to give the best analogy that I do when everyone asks me personally. What are options? So I'm going to go ahead and give you an example. Let's say, Elijah, you own a home, right? And your home is
Yes.
for sale. And you're selling the house for $100,000. Just make it nice and even.
Okay.
And that's the sell price of your home, and that's it, $100,000. Well, I come around and I say, hey, Elijah, this is a nice house. And you say, oh, thank you. I go, well, I want to buy your house. How much is it? You say, well, 100,000. I'm like, yeah, man. Well, I don't want to put 100,000 right now. Well, you're like, well, that's the price. So I say, listen, how about you give me 60 days and I'm allowed to buy the home for 100,000. I don't want you to sell it to anyone else. Just for 60
Okay.
days from today, I want you to hold this home for me. And I will give you $10,000 if you just hold it. And if I don't buy the house in 2 months, the $10,000 is yours, which is considered the premium. We're going to call it that premium. And you're like, hey,
Okay.
what can I lose, right? I got $10,000 in my
Right.
pocket. Best case scenario, he buys the house. Worst case scenario, I have $10,000 in my pocket for 2 months of waiting. Great. So
Oh,
you're outside, Elijah. You're doing some yard work. No big deal, right? You strike
right.
oil. Oil starts gushing from the backyard. Wow, you go going crazy, right? So
Should be
ExxonMobil
great.
stops by and says, hey, you got oil in your backyard, man. We want to put a drill here in your backyard. Your home is now worth $1 million. And you're like, what? Woo, can't wait to sell this house. $1 million, and I got oil. Let's go. I knock on the door. Hey, heard you were selling your house. Heard you struck oil. You're like, yeah, what about it? And I say, well, I have a contract stating that you have to sell me this house for $100,000. Then you say, whoa, whoa, wait a minute, man. Don't cut me out of my profit, man. Come on, man. That's $1 million. And I say, okay, listen, Elijah, I'm a nice guy. I'm a capitalist. You're a capitalist. Listen, man, I don't want the house. I'm a speculator. So, how about this? You give me $200,000 or $150,000 for my piece of paper. We rip it up, and I get $150,000, and you get your house, the difference of $850,000 to yourself. Does that sound like a good deal to you? Or I could just pick the contract up in 2 months and I own the house free and clear for $100,000, which you have to honor. You'd be like, oh man, you know what? I'll take my loss. I'll still keep 850,000. You only take 150. Sold. What you just did right there is contract selling. You never own the security. You never owned the home. All you did was trade a contract. That's all you did. So,
Okay.
what does it mean by option? When you have an options, you own contracts. It gives you the right, but not the obligation to buy the stock or the security. In this instance, the home. If we would have waited 2 months, you still have the chance, the option to buy the house for $100,000. You don't have to if you want to. So let's flip it.
Okay.
Let's say the house has a really bad foundation and there's like a mudslide and the home just basically crumbles. You're not going to buy that house for $100,000. You'd be like, well, that
Yeah.
house is crap. I just lost $10,000. All you did was lose the premium of the contract, what you paid for it, the 10,000, and you move on. That's what we call
Okay.
a call option. So always think of a home, like the house, hey, I have a piece of paper, I can buy the house whenever I want, and you're speculating that it's going to go up. That the contract, you're buying the price of the underlying security, this meaning the house, for a more expensive price, but you're locking in a price now. So,
Exactly.
how do we take that analogy into the market? Give an example. The home, quote unquote, is Apple. So let's take a look at August 4th, right? August 4th, 2017.
Okay.
The current price, let me see. Let me bring up 14 strikes. 14 strikes should be okay, right, Anthony?
Yeah, just lower it. Might as well, just
Then
so it could
let's
be a
put 10. Let's
sample.
make it easy.
Yeah, 10. 10,
Okay.
yeah.
All right, so we're looking at August 4th, 2017. That is the expiration date, the last day you can buy the house. We're still using the house analogy, right? That's the
Right.
expiration. The strike is the price, meaning what you expect it to break or hit. For example, here, the current price of Apple, the house, is 143.73. So if you said, hey, listen, I think Apple, the house, is going to be worth more than $143 a share. Well, that's a pretty, not a very risky bet because it's already above 143. So we call that in the money. In the money means it's already a contract that's kind of already said beaten the strike or it's above the strike price.
Okay.
You get what I'm saying? Like it's above. So you're gonna pay a little more because it's already there. It's already past the amount of the strike. So you're already kind of getting it at a discount in a sense, but you're paying a little more. When I say about a discount, what I mean is that when you let's say the price does not change until August 4th and it's 143.73 and you exercise your contract. Well, one call, that's what we call one call, is 100 contracts. So you can buy 100 shares of Apple at $143 a share if you choose to exercise it. That is your right, not your obligation. So you're getting
Okay.
143.73, but you're getting at 143 is a discount. But if you see here what I'm circling, the 525 and the 480, those are premiums. You have to pay that amount in order to earn those to get those contracts. The ask, I'm pretty sure
Okay.
if you know with stocks. I'm sorry, go ahead. Do you have a question?
All right. Yeah, I have a question.
Go
So,
ahead.
all right. So if I buy at the 143,
Hmm.
from what I'm just grasping, if I buy at the 143
Yeah.
and say the price goes up to 150, right? I'm locked into that contract at 143 and I get the difference between the 143 and the 150,
Well,
correct?
you would pocket that if you bought the stock, sure. But
Okay.
if you wanted to buy it, if you looked at your P&L on your broker, P&L mean profit and loss, and the stock is at 150 and you have 143 strike calls, you have made a lot of money. And I'm pretty sure you're going to close it. You're going to close it because that's probably
Okay.
what, Anthony, like $2,000, 2,000%. That's a
Yeah,
big
exactly.
move.
And we're actually going to trade the contracts. I mean, we're not going for the actual exercising of the
Yeah, we don't want
option,
to
which would
exercise.
be buying 100 shares of Apple at 143. We're going to sell it before that. Of
Oh,
course,
okay.
if you wanted to, you can do that. I mean, if especially if it jumps to like 160, I mean, you can always do that. But
You
what
could,
we're doing
it
is
wouldn't
is
worth it.
co- is contract swapping.
Yeah, I don't think it would be worth
Okay.
it. I mean, you could, but it's a lot more lucrative to just trade the
Exactly.
derivative, the option. That's what we do. That's why you can see on our
Okay.
Instagram 40%, 50% return, 60% returns because all we're doing is trading the paper. And
Yep.
there's going to be demand based on volume because there's either hedge funds or traders that literally want to exercise the contract because it's such a great price and they want to hold it in their funds and they just bought it at a discount. And there's some
Okay.
who just bought it
Okay.
because they're like, hey, I want to flip that into higher. You know,
Yep.
for every
Exactly.
time
So
you
like
have a
one
buyer,
one.
you have to have a seller, no matter what. In the market, there's a buyer and a seller. It has to be a zero sum, no matter what,
Yes.
buyer and seller. If you don't have buyers, you can't sell your stock or any item that you're doing. That's
Right.
why penny stocks, for example, are not really great to trade because yeah, anyone can buy a penny stock, try to sell it at a good price. You're gonna have to get demand. There's not a lot of demand on it,
Right.
so that's why we call it a sucker's bet because there's a lot of suckers that have to to buy it in order for you to get rid of it. So so you already know what a bid and ask is, right? Uh,
Yes.
yeah, so you know the ask is always what you have to pay for, which is the highest price. Whatever the highest price, whatever costs you more, that's what you're gonna pay. So if you want to sell
Right.
it, you got to sell at the lowest price. Someone's gonna pay the lowest price, and if you want to buy it, someone wants you to pay the highest price. That's just the market.
That's the
So
easy way to put it.
we
Nice.
usually don't. Thank you. We usually don't buy in the money calls. We usually buy out of the money calls. Why do we do
Yep.
that? It's a little cheaper and it's a little more speculative. So if you see here, 143 on Apple is 525 each. Well, if that's one contract, it's 525 times 100. So let me get my calculator here. Where's my calculator?
525.
Yeah, 525 times 100. So pretty easy. Jeez. You know what? I'll get my phone. I have my phone in my hand. Hello. That's one contract. So, man, 525 times 100. Just with the decimal point is $525. But I'm trying to do it for 10. So let's say if you wanted to buy 10 contracts at a time, right? So one
Okay.
call is $525. When I buy 10 calls, that's 5,250. There's hedge funds that buy 100 contracts at a time. But again, the bid and ask is based on two things: the underlying stock price and the volume. If there's a lot of people who want to buy, guess what? Prices are going up. If there's very little demand, guess what? Prices are going down. It's not manipulated, it's the market. It's just basically like that.
Okay.
So, Anthony, you want to go and take over and speak a little bit about
I
strikes
wanted to
and the
point out.
weeklies and all that
Yeah, I
stuff?
wanted to point out actually, while we're here, you see where the ask and the bid is. The next column over is the net change, where it says calls. That you can actually see what the premium did over the day. So you see at 144 strike, it changed. I think that's $1. It says -100 in red.
Oh,
That's what the
okay.
premium. That's what the see Apple dropped today, so that's what the premium dropped today.
Mhm.
So if you were
Okay.
holding that option 144, you lost a buck on the option,
And make sure to
on the
multiply that
premium.
times 100, or
Yeah,
how many calls
exactly.
you have.
So just to point that out, I mean, if Carlos, if you want to go to where is that? Where
Well,
you
if you,
can put the volume
here you
and
go. I'm gonna
okay, layout. No, layout.
um
Layout last X net change, right above the strikes 10.
here, Anthony. I'm gonna give you access to the mouse too. I just
I
gave
can
you
do that.
access to the keyboard
Nice.
and mouse, so it just make it easier. This is how we do our conferences.
Okay.
So you have to accept, Anthony. I think you should
Yeah.
accept. You're on your
Hold on.
laptop. That's why.
Yeah. Hold on.
Yep, yep. And what's great news is that this is live. So the only thing is that this was based on today's movement on Apple or the security. The only thing is that it'll change at 9:30 at the
Okay.
bell for better or worse, for lower or higher, based on pre-market. Because anytime I think pre-market opens at 7 a.m. and it goes on till 9:30, 9:29. And the thing with pre-market, it's very light volume. Not a lot of people trade pre-market, but it gives you kind of a feel, kind of a sense of where the demand is. If there's demand for the buying or demand for selling it. So you'll see in the
Okay.
morning, you'll see a pre-market movement. For example, Apple, let's say this morning, -1%. So you're knowing that's going to open to the downside because you already have
Exactly.
you already have sellers of the security, sellers of the stock. So those are the
Okay.
things that we look at as well. So of course, just for anything that there's a call, there's puts. Puts are meaning you get to short it. So let's say we want to do. Let me go ahead and explain puts. Puts are basically the inverse of it. If someone wants to buy, someone has to sell. So at the end of the day, the best way I can equate what puts are basically like insurance policies. Everyone has car insurance, right? Well, a put is
Right.
basically an insurance policy on the security. Well, let's say you own a $20,000 car and you pay insurance that you hope that doesn't go down. You pay
Right.
$20,000, right, for your car. So your monthly premium is probably going to be Anthony is going to step back in. Um, the premium will probably be like $200 a month, $100 a month. Well, there you go. Anthony has the access to the mouse now. So I'm explaining puts, Anthony. So when you pay $100 a month for your insurance policy, you're paying a premium. So if something happens to your car, you crash it or whatever gets stolen, you get the 20,000 back, right? The
Right.
full amount of the car, what it's worth. Well, it is in your best interest that you don't want to crash the car. You still want to keep your car. And if it does crash or whatever, you're expecting the insurance to pay out to you. Well, that's kind of how it works with puts. You can bet. I hate to use the word bet because it sounds like it's gambling. you could bet that it's going to go down. So it's at 143. So if you put a put at 140 at 144, which is considered in the money puts, remember? In the money,
Hmm.
just keep it in reverse. If it's at 143 and you have a 144 put, you're already in the money. You're already getting a discount. So you have to pay a little more premium. So you're wanting the stock to go down. So if it goes down to 143, 142, 141, guess what? You're getting paid. And you can see right here, net difference, it goes up in price. So those 143 puts right now went up $1.56 from the day before.
Okay.
So there you go, and you can see the volume. Look at the volume on the puts on a 140 strike on August 4th. Wow, 7,538. Hey, you see that, Anthony?
Yeah, exactly. That's what.
Wow.
That's. Can you hear me? You can hear me, right?
Yeah, we can all hear you.
Okay. Yeah. No, because I had to download a whole bunch of stuff to get this
Oh.
going. Yeah, I actually put in volume and open interest, and that's one of the key things we look for when we choose our options. They have to have. We need volume. It needs to have some volume. Now, volume is how many contracts are being bought on the day. So right there, that's 7,000. That's crazy, huh? 7,000 puts contracts opened.
Somebody's making a
Um,
bet, big bet against Apple.
yeah, and the open interest is only 675. So before today, there were only 675 contracts of those puts open, and someone, made it well together. Bought 7,500 contracts. So that's something we look for. I mean, that somebody's making a big bet. Now we don't know who that is, but that's just something to watch for. That's really, really big. Now on the call side, if you move to this side, anything above, I mean, these calls are okay. Weekly options are okay. If I could switch it, let me just switch August. I'll switch to, let me see, August 18th, because the monthlies usually have more. Look, see, open interest 15,000, 36,000. Again, open interest is what is open, what contracts are open. Volume is on the day. I mean, you see here, this is the 155 August 18 calls, 1,300 on the day. The
Hmm.
150, 3,500 were bought on the day. And on the put side, you see on the volume 2,000 on the day, 3,000 on the day for the 130 puts. So that's what we look for. We want to see some volume, and we at least would like to see 500 to 1,000 open interest contracts, because again, it's all supply and demand. So people have to have these contracts, and that's again also, like Carlos mentioned, that's why we trade big cap.
And make sure
No
also
penny stocks.
that's going to affect also the more open interest, you're going to have a thinner spread. The spread is basically the difference between a bid and ask, and that eats into your P&L, your profit and loss. I mean, of course you can
Exactly.
sell it, but if you have a dollar spread, which is pretty wide, look at the spread between August 18, 17 calls, August 18 calls on a 135 strike, 15 cent, 15 cent, and then it goes to 20 cents. 10
Yep.
cents, the thinnest of the spreads. See, not even 3 cents right here, but see the open interest. You want thin spreads. That's why we trade big caps, because if you have a bid of one and an ask of three on your P&L, on your broker, it's going to say, hey, you're making X amount of money based on the ask, not the bid, because you need to sell it. So it's saying that,
Right.
oh, you're up 50%. Yeah, because the ask is at three. But if it's at
Yeah.
one, take 66% off that. You didn't make 50% on your money. You actually made less. So
Right.
always put it in based on the bid, because it's not about how much you can pay for it. It's how much someone's willing to pay to you to sell your contract. That's the
Right.
key.
Exactly. Another thing we look for also, this is just good to look at, not position, where is this, to
Wait, look.
see, scroll, I got it.
Yeah, you got it. Oh,
Uh,
statistics
yeah, option time and sales. I mean, this is something, it's
when it's
pretty cool to
live.
look at, because
When it's
yeah,
live.
when it's live, it's beautiful.
It
But
is beautiful.
um,
Level
y-
two is basically seeing all the buyers and sellers and all the markets, which is NYSE, American Stock Exchange, ARCA. Those are all trading platforms. Which is the other one? I think there's another one. NYMEX? That's for commodities. But
yeah,
there's
that's commodities.
you'll see like just every market, because when you buy a stock, you're not buying just from one. They have to route it, and the router's actually in Jersey, which is pretty cool. And
Mm.
the big company that does it is Citadel. Citadel actually runs something called dark pools. And dark pools, what they do is they match based on algorithms and based on who's willing to sell one price and who's willing to pay for the other price. And they have a match. In the old days, it used to be called open outcry, where you have a guy in the pit yelling at each other. Remember that?
Yeah.
Yeah. That you see what they're doing is they're trying to match buyers and sellers. So if I have 5 and you have 5, we have a match. That's all it is. But they're doing that in milliseconds on the Globex. Globex is the platform, Anthony. Sorry, Globex.
Yeah, yep.
On the Globex platform. And what they're doing in Citadel and all these big companies through these huge ass servers is that they're matching. Hey, I want to buy Apple at 143.73, and I'm not willing to pay a cent more. You have a limit order. Well, a guy's like, okay, I'm willing to sell at 143.73, but I'm only going to sell 100 shares. Boom. Okay, I can only buy 100 shares from that guy. And sometimes when you buy stock, as an example, it kind of stalls because you need to find sellers that want to sell at that price. If you pay market, if you put market, I never recommend to put market because then you'll get like tons of different prices. It'll just give you whatever is out there.
Exactly.
So you definitely want to put a limit on what you want to buy or sell for because you don't want to pay too much and you definitely don't want to sell for too little.
Yep, exactly. With the options and time and sales, this is good to look at. At the end of the day, see where the market sentiment is. I mean, here, and Carlos, this is what we were looking at, 7,500 puts for the 140, August 18th.
Mm-hmm.
That's, that was actually in one trade. Somebody bought 7,500.
Yeah, somebody is definitely making a bet. So keep that in
mind. And the biggest call was 500. So
let's
as you can
multiply
see,
that.
sentiment,
The price is 196, right? Oh my God. So, wow. Okay, so 196 times 100 is $196. Times 7,500 puts. Someone spent $1.47 million betting against Apple.
Wow.
And that's small potatoes. That is not a lot. There's big bets out there I've seen a lot more. I've seen 10,000. I've seen 25,000. You're talking about, and this is a bet that they can hedge because now we're getting into tech. Now we're getting into a little more expert stuff like straddles and spreads and everything.
Exactly.
But
we don't do that too much.
Yeah, we don't do that way too much. What we like to do, honestly, is we like to hedge. Hedge is something where if you have a really big position, you may on a call, you may want to put a put just to kind of to mitigate losses. So let's say if it goes down, you're kind of softening the blow. But if it goes up and you're making your money, hey, you just pay basically insurance. You just pay a little bit of insurance. You're like, I don't care. My car didn't crash. But you know what? I'm insured for my car. So that's key.
Yeah, and the great thing about that too, now that you touched that subject, in options, you can have a long-term play. Like you can hold calls in Apple for long-term for maybe an October expiry. But as like right now, techs are kind of selling off. If they break support, you might want to make some quick money. You have that option to open up a put and make some quick money while you still hold your long-term calls. So that's another good thing about option trading.
Yeah, if you just own straight up stocks, you can't sell at the same time as you're buying.
Exactly.
All you have is one. So options in the beginning, before derivatives trading, which what we're doing derivatives, it sounds very complicated, but it's just basically what we're doing is options. Options were basically a way to hedge stock owners who own a stock long term, and they're like, you know what? I think it's going to go down, but I don't want my portfolio going down. I'm willing to make a little money. So this is level one. We're talking level one options where you actually have to own the stock. What we're doing is that we're buying on margin. Now, don't get scared. Margin, people think it's borrowing. All we're doing is having an options. We're having options contracts not secured by the single stock because we don't own it. Now, personally, I own Apple stock in my personal portfolio, but not in this account. I'm just saying that we're doing it based on trading contracts on something we don't own. So that sounds really risky, but it's been very lucrative. So It's kind of like trading insurance contracts on your car. It sounds terrible. This is what happened in 2007. People were buying insurance contracts. I mean, listen, if you know what you're doing, this isn't complicated. Everyone try to make it more complicated than this. Listen, if you do your due diligence, if you have patience, and you do your research, honestly, you can beat the market. You can. You really can. We are not X-Men. We are not geniuses. What we do is that we work hard, and this is what we do for a living. We're professionals. But honestly,
Okay.
if you learn this business, you can beat it.
Definitely, definitely. You know, it's a great business. You gotta love it. You know, as long
Oh,
as you
you gotta love it.
analyze, you know, you'll make the returns and just keep hustling. You know,
Okay.
yeah.
Did
Okay.
you have any questions so we can go ahead and look at it?
Okay. So I'm trying to like I get the concept of it, but I'm just trying to because like I said, I've only been doing like buying here, buying there. I usually play the earnings game. That's how I made my flips. I was like, okay, I do a little research on okay, this company did X, Y, and Z during their quarterlies, and then okay, I'm gonna buy this ahead of their earnings and just play. I play. That's how I usually played it. Sounds really simple. And when I went to a guy, he was like, "I can't believe you made that much money doing that." I was like, "I guess," but
It can't be lucrative,
he,
sure.
yeah. So,
I mean, that is
so
also a way to play. You know, going forward through earnings, you can definitely options is probably a better way to actually play it than actually buying the stock because, I mean, just for an example, let's say earnings were June 29th, and we were going to buy the 145 calls at 68 cents right here. Let's just say,
okay,
if you was to buy it today and the earnings, let's say they beat expectations and Apple hit, you know, 150, 155 on that day when it opened up, these the premium instead of 68, it'll probably be trading at, you know, $2.20. So you'll make a lot of money. Now on the flip side, if earnings miss and it tanked, your option will basically be out the money. So you'll lose the 60. Let's say you bought one contract, you'll lose the $68 that you paid for it, and that's your max loss. So with a stock, I mean, it could drop, you know, $20, $30, and you have to
right.
sit there and hold that. With the option, you're basically out the money, and the $68 is lost, but you still have till June 30th in this example to make that money back also. So that's a way you can play it. The good thing about the option is that's your stop loss. You know, and that's the going to risk management. We always recommend 2 to 3%, depending on
Max
your goals. Maximum 5%
on any
risk
trade,
per trade.
on any one
Exactly.
security trade. Yeah.
Okay,
So just example, let's say there's 10,000 in an account. 2%, your max risk is $200. So with this example that I just gave, strike 145.68, you buy almost about three contracts, you know, and that would be 2%. Now, if you lose that trade, that's all you lost is 2% of the account. You know, you can't lose no more because the contract is basically out of the money. Now, that's on the downside. So you see what you're risking and how these options work. You know, is that a
okay,
little clear for you?
yeah. So, okay,
The best thing
all right,
about
yeah,
options also is that in risk management standpoint, you can only lose the premium. You can't go
Exactly.
over. If you own a stock,
oh,
the lowest can go is zero. But if you buy it on margin, there you go. Now you're the problem. And remember,
Oh yeah,
you can't make profit on a stock unless you sell it or close the position, whether it's a short sale or whatever. And on options, you close the contract. I never owned the stock. I own the contract. So it's easier to get in and out. If you're day trading stocks, you're closing that position. That's it. You don't own it anymore.
yeah,
There's
exactly.
no more going to go up. What if you want to hold on to it? As an example. But
okay,
yeah, I would say that's the best thing about options, that our risk is already limited because it's only based on the premium we paid.
okay,
Exactly. You know, no gaps, you know, or you know, crazy days like a Brexit fall or anything can
Yeah.
really
Goes
impact
to
you.
zero. I mean, you're out of the money.
Yeah,
Out
it
of the
doesn't
money.
matter.
That's all it is, and then you move on. We've had those. We've
okay,
had other money calls or puts, and we're like, okay, you move on. If you buy a contract, look at the contract price. If it says $500, if you lost $500 tomorrow, would you lose sleep? Every
no,
time, ask yourself that question before you buy. I mean, listen, I love Amazon, but their calls are expensive. Let's take a look at them.
Oh yeah.
So,
Oh yeah,
this
go
is
ahead.
Apple, which is, one of the most heavily traded stocks in the market. So this is Amazon, remember, based on the stock price. Look at the calls: $9.90,
That's for June.
$8.55. This is
That's for two
June.
days away.
that's for one
Yeah.
contract.
Right. So
Oh,
anything that's closer to the expiration date is going to be cheaper. Anything farther away is going to be more expensive, for the simple fact that you have time to make up losses. Because
Look at that,
let's
38
say you have
bucks.
until August to hit 977. You take that bet, or I mean, if you wanted to, as an example, you would take that bet. I mean, you're telling me I got what 30 days, 60 days, or was 45 days for it to go $1 up? Yeah, that's a pretty good bet. But you're gonna pay a premium, $36.50. Remember, multiply that by 100. That's a $3,000 call for one. For one call.
Shows you the difference. Shows you the difference between buying Amazon or buying Apple. And Apple's, to tell you the truth, when you think about it, it's so cheap.
It is cheap because guess what? A lot of volume. People trade Amazon. Apple is the largest company by market cap. So you're definitely gonna get filled. You're definitely gonna have volume. You're gonna have people who are gonna buy, Amazon. Or I mean Apple. They're gonna buy those stocks. Or I don't have to say everyone owns stock in Apple. I have to say pretty safe to say everyone owns stock in Apple, mutual fund, 401k, whatever.
Right.
I mean, it's the biggest company in the world.
Just while we're here, you see the August 4th. You see we have no volume and no open interest, very little. We would pass on this right here. If you notice that, Elijah, can you see? Right here, you see there's no on the 975, 977, 980. There's literally little. There's no volume. There's very little open interest.
Hey, look at the spread. Look at the spread. Look at the spread of that on this.
Yeah, exactly. Look,
$3 almost. You're paying $3 just to get rid of your contract. That's eating into your P&L. Yeah. We don't want to do that.
Right.
So that's so you get that this is a perfect example right here compared to, let's say, the July 7th probably doesn't have any either. Well, it has some.
Look at June 30th. June 30th, you should have a higher volume of. There you go.
Yeah. See, at least we're above that. See, on the volume, it's high too. On the volume, that's only 3 days away. Some nice big bets
right here. How about this? This put. Everyone's betting against Amazon here.
Yeah.
Okay, so the strike price is 980, and they're betting that it won't hit the 980 by what is this, June 30th, which is Friday.
Friday, yep. So, that's very risky because there's a lot of movement. I mean, we wouldn't do this close
the whole time.
We don't trade options that close to expiry. I think the closest we've ever done was 30 days. No, I think it was 14 days away, and we got hit. It was Netflix.
We like 30 plus.
30 plus because we like time. Just like anything else, we want to have time, especially around earnings. Just like you said, we want to have earnings. Right now, we own tech. We own a lot of tech calls, but July is when all the earnings hit. So we're still in June. We're only a couple days away. End of the quarter, a lot of funds are trying to look good for their quarterlies. They're going to sell profitable positions. Tech has been on fire. I mean, I don't blame these funds for getting rid of their positions to make profit. Nothing fundamentally has changed. No earnings have changed. No fundamentals, no PEs, no nothing. It's just a sector-wide sell-off, which is a great hint that, there's profit taking. That's it. If it was Amazon going to hell, fine. If buying it by itself, I'm like, okay, something happened. Jeff Bezos died or something happened. Whatever. Knock on wood, right? But it's just a sector-wide sell-off, meaning when you have one sector like tech that has been killing it, I think it's up, 25% for the year? You're going to have these big Bill Ackman type hedge funds that own big positions. They're like, hey, we got to make our quarter look good. We're going to have to sell
and it's quarter wrap-up, exactly.
Yeah, you got to sell positions. Okay. So, if you want to raise capital, make sure no one leaves their fund. There you go. But the smart ones look at the fundamentals and the technicals and see for good play. Again, you don't want to buy the dip every time, obviously, but it's worked for us because we know that, hey, listen, we know a Bentley is a Bentley, whether it's $100,000 or $200,000. It's still a Bentley. Whether it's basically what you put value in it. Amazon hasn't changed at all. Like Amazon has only grown. I mean, they're going to buy Whole Foods now. Is it worth $976? It's still a growth stock. I mean, it hit $1,000. So technically, we're at a $25 discount. I mean, would you buy Amazon at a $25 discount? That's the question you need to ask yourself.
I would. Okay, so another important question is, okay, so during that year, like I was saying that I made all that money, how do you guys go about like tax?
With tax? Okay, tax question. There's two ways. You can, again, I don't know if you're trading in Japan or where do you live? What state do you live in?
Well, I'm from New Jersey, so
From Jersey. Okay, well, so New Jersey has state tax. That's the only that sucks.
yeah.
Um,
Oh, you're from Jersey. I'm from Jersey too.
yeah,
Oh,
my
nice.
grandma's from Perth Amboy. My
Oh, really?
yeah, I'm in Florida. So is Anthony. So
Oh,
beautiful Florida doesn't have state tax. That's the beauty of it.
okay.
You could always trade open an LLC. This is a way to mitigate taxes. You can open LLC very cheap online on like LegalZoom or whatever, and just call it whatever you want. Whatever Trading Inc. Call it whatever you want. Trade on that name, and the beauty of it is that everything's an expense. You can expense a lot of things, and any kind of gains. Remember, it's offset by your expenses. So let's say you make $10,000 in profit. Well, you got a computer at home, right? Electricity.
Yeah.
You have a home office. You can expense those things and still keep, your profits, because now the taxes are based on profit minus expenses. So that's one way to do it. Now, if you trade on your personal account, well, then you're talking about how much you made in a year. Now, I don't know how much you made in a year. I don't know what tax bracket you're in, but
Right.
now you're talking about short-term capital gains. I
Yeah,
think
capital gains tax.
capital gains tax is what? I want to say 25%.
Yeah, it's high. It's
Yeah,
high.
long-term capital is
Yeah,
15. It's 30%, and then 15% is long-term. You'd have to hold the position for 24 months. Or 12 months.
That's 12. It's
12
12
months.
months.
12 months, and then it's 15%. But yeah, man, we don't hold, sometimes we don't hold options for 15 days, let alone 12 months,
Okay.
man. So again, the best way, my advice would be to open an LLC. It may be a little bit more time, but man, it's gonna save you a lot of headache. Or if
Okay.
not, just pay the 30%, man. Tax man's gonna take his cut, man, whether you like it or not. You're gonna have to
Yeah,
pay.
get his regardless.
The problem is that now you got the state tax too. So the state's gonna
Okay.
want a little something because you live in
Yeah,
wonderful New Jersey. There's a good thing you
yeah,
don't live in
they
California.
hammer.
That's it.
Yeah, for sure.
Just be happy.
Okay.
But yeah, I mean, just a question: how much are you working with in the market on TD Ameritrade?
Right now I'm about 14,000.
14,000. Okay. Now we do offer uh, um, portfolio service where we trade for you, and we have plenty of
Okay.
accounts that do TD Ameritrade, and we charge 2% of the portfolio managed and 20% of the profits.
O-
Now, again,
o-
we have clients that are just like, I don't care how you do it, just do it. Now, the beauty of it is that you have access to your account. You get to check whenever the hell you want. All we do
Right.
is trade for you. You're not giving us any money. It's still your money. All you do every quarter is that you pay us 20% of your profit and 2% of the account managed. That's it.
Okay.
And that's payable every
Oh,
quarter. And I think our average every quarter has been about 23, 22% on equity growth.
Yep.
That's
oh
been
wow.
our, yeah, so very solid, and it's all verified. All verified and everything. Again, you can monitor us whenever you like. You'd have access to your own TD Ameritrade account. You could check in whenever you want, check into the app whenever you want. And we have a spreadsheet that we put on Google Drive where you can actually check and see how we've been doing. And we keep up with you.
Oh,
We chat with you through WhatsApp or GroupMe or whatever you want, and we tell you what positions we're going. And you let us know if you have any questions, and so on and so forth.
okay.
That's just more for the customer or the clients who are just like, you know what, hands off. They'd rather pay for the service for someone professionals to handle for them. Now we have Signal members are like they're more hands on. They're like, I want to do it myself. Okay, that's
It's
$100 a
probably
month.
me. Yeah, it's probably me.
Okay, there you go. Just wanted to offer
Okay.
the service. That was all. But yeah, man. I mean, again, it's pretty self-explanatory. And on the chat room too, you can ask us any questions. Definitely, if you're part of our Signal service, ask us anytime.
Oh,
Hey, what's the strike here? How come I don't see strikes? Or what do you think about this? We're always open. We're always talking markets, and it's a pretty cool group.
okay.
I mean, we don't the stock market people don't talk a lot, but I think it's because they're counting their money. That's basically it.
Right.
They don't talk a lot. The
Yeah,
forex guys talk a
We
lot.
always we always put in our analysis throughout the day regardless. So there's always like a news feed coming in through the chat room. So that's a good thing.
Yeah, in real
We
time.
stay engaged. Yep, always.
Okay. All right. Yeah, this has definitely been an experience. I'm learning a lot. Okay. Is there, I know online that they have like like test places like you can go on, you could practice option trading before you actually get into it. Do you guys recommend any
Yeah, TD
website?
Ameritrade has a demo account. You could do that for free. You could do it for
Oh,
60
okay.
days. So you get used to the platform. The problem is it's not in real time. It's on delayed
Yeah,
Uh,
it's like
10 minutes. I
15
think it's
minutes behind,
10
something
minutes
like
or
that.
15 minutes behind.
But
okay.
definitely that's a good way to start, so you can see how to actually, when you first make an entry, so you can see everything and see how it works. So that would actually be best. I always recommend starting off with a practice account. If you never traded an instrument before, it's best to do demo, of course.
Okay. Also, your signals. What do you guys use to, say, hey, I'm gonna buy, or I'm not gonna buy?
We put it on the chat room. We put exactly like this: buy Apple calls
Hmm.
expiry at the ask price that we're putting in and the strike price. So be buy example buy Amazon June 30 calls 975 strike at 1095. That's how we send it out.
Yes.
Yeah.
Okay.
You would open this up, or your mobile
Mobile app, then you
trader.
click right here, double
Yep, click
click,
right there.
and then you
Boom.
see here and you put, if you want to put 10, that's just whatever. And it goes from there.
Oh,
Confirm and
okay.
send, and boom.
And that's it. And always put limit. Always put limit. That's key.
Okay.
But yeah, I mean, the
So,
app is very, very simple. That's why Thinkorswim is probably the best. Is their mobile app is the best.
okay.
Oh yeah, definitely.
It's not
So
even
much
Okay.
easier.
close.
All right. So go back to that previous trade that you just did. So
Yeah.
1095.
So let's say we
So
go, I tell you, we go on the line, we're like, okay, buy Amazon June 30th calls, 975 strike at 1095. Double
okay.
click, boom, you're right here.
Let
So
me
you
show you.
have
Let me show you. No, go ahead, Elijah. I'll let you finish.
okay.
Go
Then I'll
ahead,
show you
So
Anthony.
something.
you,
Take over.
so you got the 10. You got the 10 contracts. So 1095 times 10 is what? 195 times what? Then you times it by
Oh,
100
wait.
again. Correct?
No, you do this. Remember, 975, I mean, excuse me, 1095 times 100. It's
Okay.
$1,095. That's just one call. Times that
Yeah,
times
one contract is X 100.
100.
One contract times 100.
Yeah.
So
Okay.
it's you get it. You get that. One contract is so right here.
This
Where'd
would
you
be a,
put it?
this
Right
would be
here. This
this
is
would be like
10.
an $11,000 call for 10.
Yeah.
Oh, okay.
So you just
So
put
put
one.
one. Yeah, one. There you go.
So then you go
Okay.
here to confirm and send. It's not going to buy, but it'll tell you exactly how much it is. So it'll
There you go.
say
$1,000.
max profit is infinite. I mean, Amazon keeps going, whatever. When you do calls and puts, the max profit is always infinite. Always,
Okay.
because I mean, no. Max profit on a put is zero. I mean, there is a set price because it can only go to zero stock. The max loss again is always the cost of the premium, and
What you
then you
pay
have
for it. Yep.
and you have the commission right here.
Oh, commissions are really cheap. So just $1.50 for
That's how we
No,
have.
you
That's
have.
how we have it set up. We're just paying
Oh,
per call. It used to be a flat rate plus 50 cents, but it's
okay.
just easier the way we have it set up.
Yeah, it depends on if you're buying a lot of calls or if you're buying one call, two calls. It depends on
Really depends.
your strategy. But yeah, real quick, just show you, real time something. Since QQQ is at support, what do you use your charts, Carlos? Forex trader, is that fine? Can I pull
Forex
up a
trader,
chart
yeah,
on
go ahead.
Forex trader?
Hmm.
Just
You can use that, or you can just go to charts.
okay.
I mean, monitor is a good one too. That's how I have it. I have it under charts. Yeah.
Just put just an example. Let's just say we wanted to buy QQQ right now.
QQQ is the Nasdaq index or the Nasdaq ETF,
Oh, okay.
exchange traded fund, meaning you're buying the
Okay.
index of Nasdaq.
Okay. Yeah, I've seen it before, but I wasn't quite sure. Like EFTs and
Yeah,
ETFs,
QQQ is great.
ETFs. Oh, it's great.
All right, so whoa. So let's just say, hold
You
on.
zoom out a little bit.
wow, you can get that close.
Yeah, you could. I mean, it's great. You could zoom in as much as you want, zoom out as much as you want. You can even back test if you wanted to. We don't do that as much, but A back test is more of like a tease. What it could have been.
All right, so let's just say QQQ right now, it's at support. This is actually critical support for tech because if we break here, I mean, we're going lower.
We're gonna get a squeeze. A squeeze means
Yeah,
that
mhm.
all those buyers who have stop losses, their stop losses are gonna get hit. And when you have a stop loss and you're buying, you have to sell. You have to close your position, meaning sell. So that kind of kind of a waterfall of selling creates a squeeze, meaning it goes to the downside.
Yep, exactly. Now, just for a trade example, let's just say, okay, we want to buy QQQ here. It's at support. We want to take a stab at it. So we would go to trade all products. Type in QQQ. Okay, now we would choose our date. Now, where are we gonna shoot for? Let's say, okay, now let's do this real time. Yeah, okay, let's do let's do September.
September 15th.
Let's just say we're gonna go through the whole summer. We're gonna ride this through earnings, and we're gonna give ourselves a little bit more time.
We can close anytime, FYI. You can close anytime. You don't have to be.
We can buy it today, close it tomorrow. It doesn't matter. We can close anytime we want. So let's say, okay, we're looking at September. So that's the first step. We're buying September calls. That's our expiry date. We have until September to do whatever we want with the calls. And let me just go back. So I'll tell you exactly how we really do it. Okay, we're buying at 138. Let's target 140. This will make it cheaper for us to buy out of the money calls. So I'd say let's buy 140, 142 calls, something like that. Okay, here we go. You see how they're cheaper than in the money, 494, 560. So we're looking at 141, 142. Let's buy 142 calls at 224. So we will be paying $2.24 premium for the 142 calls, and we would have until September 15th for price for QQQ to hit 142 and up. And from the second we buy it, as long as it goes up, it makes profit. It doesn't have to hit 142 to make profit. It makes profit from when you buy it.
Yeah, if you buy low, you sell high. So let's say if you bought at 138 and it hits 140 and you made a nice little tidy profit, it didn't hit your strike yet. You can still get the hell out if you want.
Yeah, exactly. So that right there is like a real-time trade at how we would do it. It's actually a good trade if you want to take a stab at technology right now because it's at support. This sell-off is really big, but it's at support, critical support too. So if you want to take a stab at it, this is a way you would do it. Now, this is just an example. But yeah, this is exactly how we would make a trade in options. That's a perfect example right there.
Okay, now it's starting to slow down for me, so I'm starting to grasp it. Okay.
Yeah, so I figured this would help, so that's why I'm like, let me just, because I remember QQQ is at support, so I'm like, let me, throw this one there so you can see. Any questions on that? Do you see how that works a little bit?
Okay, so, and then the strike is 142, and is okay.
So the strike is one.
So if it hits 142, does it automatically sell, or I can just keep going?
You can keep going. Yeah, it doesn't make anything. Only thing it would say on your account when it hits 142, it'll have an ITM. It'll say in the money, and that means that your calls are in the money, meaning that it's a little more valuable. It just means that you hit the strike. Does it really make a difference? I mean, yeah, it's nice, but even in the money calls, you could still be not at a profit. So I mean, that's not like let's say right now 138.03, right? And you bought 138 calls, and it stays at 138.03. You're not going to make any profit because you bought it at the same price it is in September. Say September, nothing moved, and it's at 138.03. You're basically going to be flat. You're not going to get anything. Remember, it's based on buyers and sellers. Just because the price went up, if there's no buyers of those contracts, your contract is not valuable enough to warrant a good price. At the end of the day, the market is still based on buyers and sellers. So that's why it's so imperative for volume and option interest. Open interest, excuse me. Yeah, it's so imperative because you can have deep in the money calls on a penny stock, but no one's gonna buy it.
Yeah.
Right.
That's why we always do big caps because there's always going to be buyers of a QQQ, an Apple, ExxonMobil, or whatever.
Exactly. Okay. So yeah, you can sell it at any point at any any given time. I mean, let's say you buy it today at 224, the 142 calls, where the arrow is right now, and let's say by next Friday, the price of QQQ went up, $10, let's say, to 148, and these premiums were trading at $5, you would sell them. I mean, you made over 100% on your premium, so you would definitely sell that and collect the profits. That's what we're aiming for. We're buying low and selling it high. And reverse when we buy puts, because we can play this both ways. That's the beauty of options.
Okay. So, all right. So on the same option, so we go all the way up to the top here. It says 176. All right. So it looks like the very first one for a strike price of 133. All right. So it seems like people in that case would be more so betting against QQQ. That's why it'd be more expensive rather than going up. It would go down because of that sell-off you guys were talking about after
If
the. Okay.
Yeah.
Is that how you would look at something like that? Like, or is that how they look at it?
I actually lost you.
Yeah, what
Sorry
was the
about that.
question? I'm sorry. You said if it breaks support, it goes down. What do you say would be more valuable?
Okay, so all right, so we are at the September 15th call, right?
Mm-hmm.
Okay, so it says $7.76.
Calls are here and puts are here.
Yeah. Which one are you looking at?
Okay.
Are you looking at the left or the right?
Oh, okay. I'm looking at the left. I'm looking at the calls.
Okay. So
Okay.
let's say you think let me ask you a question. Do you think QQQ is going to go lower or is it going to go higher?
I would say go lower.
Okay, so then you're looking at the put side.
Okay. So okay, I'm looking at the wrong side.
Yeah, you're looking at the wrong side. Okay, so you think QQQ is going to go lower. What mark do you think it'll hit? 135?
Let's say let's go with 134.
134. Okay, so the ask there would be 265. So you would buy, click here, always the ask.
272.
Oh, sorry. I'm looking at last price. 272. And we'll put 10 as an example. Go here. Max profit. Remember, there's a ceiling on the profit because QQQ could only go to 0. So your max profit is $131,280. Don't I wish?
Nice.
Don't we wish? Well, first of all, tech would be crashing and the world economy would be destroyed.
The world would be finished.
But enjoy your $131,000. And it would cost you, your max loss would be $2,720, meaning this is the cost of the contract, $2,720.
Okay.
Now, as you can see, just where are we? Let me see. Go back. Delete.
Yeah.
Now, as you can see, just from here, let's see. Hold on. Volume. Yeah, see, there's more volume here on the put side. So that is what I mean about when you check these options, you can see where the market sentiment is. So like for these September 15 calls and puts, the QQQ, we have more volume on the put side on the daily than we do on the call side on the day. I mean, 200. These are all different strikes, 138, 139, 140. 200 contracts bought, 229 contracts bought, 705 contracts bought, and when you flip over here, you have 1,000, you have 1,400. So that's more volume. That shows you a little bit of market sentiment to the downside on QQQ. I mean, obviously after the sell-off we had, I mean, you could see it on the chart that we pulled up. So
it's good hints. It's a good way to hint.
Yeah, that's what I was trying to, because you were saying like, okay, during the sell-off. So in that case, if I'm anticipating a sell-off, I would want to bet that, okay, this will fall. That's just how I think about it. Like, okay, I'm gonna bet that this will fall due to sell-off, and then I'll take some profit, and and sell it off. Maybe I buy it back later. But that's just how my thought process works. I don't know if that really.
Well, again,
sense.
you have your strategy. Obviously, we tell you what we're gonna do, and at the end of the day, our signal members, we tell them what to trade, but some of them have their own little strategy and they do their own thing. And there's some that are just like, they'll trade ours and they'll trade their own way. So ours is more of a supplement. Some of them are just, they only trade the way we trade. It's different for everybody. I mean, at the end of the day, is there a wrong way to do things? There's multiple ways to skin a cat. At the end of the day, it's really up to you. You're responsible for your account. But I mean, listen, does everyone have the right answer? I mean, don't we wish we knew exactly what was going to happen the day before the market? Don't I wish? I'd be a trillionaire, but I mean, it's just what it is. The best thing we do
just risk management.
And the best case scenario. We have something called a bias. If we're biased, we say, okay, we're long financials. We are short energy. So if you have a bias, it's a lot easier to have a sentiment than it is to pick one stock or, oh, it's going to hit 138. No, we just say, okay, we have a little bit of a bias. Bias meaning that, okay, we're long financials based on underlying factors. And me and Anthony talk markets all day. So this is what we do.
All we do.
That's
All we do.
all we do all day. We see everything: macroeconomics, politics. I mean, you name it, we do it. We basically have our own CNBC in a sense.
Yeah, we
Oh,
do.
okay.
Basically, how we do it.
Oh wow, this is dope. It's kind of at first it was a little overwhelming. I'm still trying to grasp it. I'm getting it, but I think it's gonna take some more time.
No,
Yeah,
of
definitely.
course.
It'll take time. It'll take time.
Do
It
some
even
demo to try
for
to
me, it
just
took
get the
me.
execution down.
I
Okay.
mean, do you think you're able, just based off this, or do you think you're able to execute a trade on demo? Let's say you had a bias that Apple was going to go up. Do you think you'll be able to pick a
Yeah,
strike price? Okay.
I think I could. Um,
Okay, that's good. I mean, like I said, it's not it's not a you're not gonna get it first day, but I think the information we gave right here, this will give you a good start. I mean, with the
yeah,
example with QQQ, that's a great, that gives you a great insight on how to go forward with this. Options, man, they're great, man. I love them. I really do.
yeah. I can see why it'd be better than trading individual stocks.
And the risk management is great. I mean, if if you stay disciplined and literally use 2 to 3% on any trade, I mean, that's your max loss on the trade, and you can't it can't go any further. You're not susceptible to flash crashes or anything like that. It's whatever you paid for is what you lose on the downside, you know. So
Right.
it's great in terms of risk management. It's great.
Okay. Definitely. I definitely would love to speak with you guys again
Sure, we're
soon.
always, this is all we do, right, Carlos? All
Yes,
we do.
sir. That's all we do. And you really have to have a passion. We love it. I mean, there's Sunday nights where we're just like, I can't wait until the markets are open on Monday. And on
Yep.
holidays, we're like, why aren't the markets open? That's just how it is. I mean, if you know what you're doing, you're gonna make it, you know. And it's gonna take time. You have to learn. The great thing is that, once you part of our service, you have us as a way to always ask us for anything. We're there to help
Right.
no matter what. Anything you need, we're here to help. We want you to succeed. That's the most important thing. I mean, listen, at the
Right.
end of the day, we can make enough money to just trade and not help anybody. But we really enjoy helping clients to succeed. That's something that we do
Right.
enjoy. I mean, it's just what it is. The
Yep.
market
Yes,
can
sir.
the market can be beaten, man. I promise you, it can. It
Okay.
just takes time. It just takes a lot of time.
Yeah, oh, real quick before you guys, I know time's about to be up, but do
Hmm.
you guys have do you guys trade overseas too, or do you just only the States?
When you say trade
Meaning
overseas,
like
what do you mean?
overseas market,
Like, I'm not really
emerging
experienced in it.
markets and stuff.
Yeah, like, do you trade like, in Japan,
We have
Korea?
we have, but it's not one of our
Not for
it's
options.
not what we trade. Yeah,
No, we
exactly.
Okay,
have you could trade futures, which is like Nikkei futures. You could trade commodity futures, which we have, and those are open in Asia and in Europe overnight. Um,
okay.
and also Forex too. I mean, there's times where we stayed up late. Brexit. I didn't sleep that day. I had to be up all night,
Oh, what a day.
all day. I mean, it was a heck of a day. Uh, Heck, even the election, the presidential election. Look at the future. I remember I didn't sleep that night either.
Oh
Yeah.
wow.
So I
Yeah,
mean,
but options are only,
nine
if that was
thirty,
your
9:40,
question,
yeah,
options
9:30.
are only the
Oh, okay.
So you'll
All
get
right,
sleep.
great.
You'll get sleep.
Okay. Oh, okay, yeah, I'm heading back to normal stateside times, so I plan on being busy all day. If I could have two screens going at the same time, once I get the hang of it, that's what I'll do. So
Where are you located right now, Elijah?
I'm in Japan. I'm in
Are
Japan.
you in the service?
Yes,
Army?
Air Force.
Oh, nice. Thank you for your service, man.
No
Nice.
problem.
Good
No
stuff.
problem.
Good stuff. Good stuff. How's it over there in Japan?
It's dope. I love it. I
I can
really do.
imagine. Something different, huh?
Yes, it's really nice. It's really
Good
nice.
stuff. Good stuff. Great. Great. Great.
But okay, great. How often are you guys available? Like, if I wanted to do this, I don't know, 2 weeks from now.
Well, whenever you are, just give us a heads up. Give us
Okay.
48 hours, I think. 48
Yeah,
hours
give us a
should be a
date.
good hit up.
Give us a
Give us a
date.
date.
A date.
Give
Yep,
us a
that's
date,
it.
and we'll do it again.
Okay, cool. I'm gonna go back. I'm gonna do some research. I'm gonna do some reading, and then maybe 2 weeks from now, come back to see if I got a better understanding of what's going on, and then we can, go from there.
Perfect. Okay. Well, this is going to be recorded. Has been recorded. I'm trying to figure out what's the best way to send it to you. I can't send
Um,
it via email, so that's going to be
that's too big.
it's too big of a file.
Um, do you have a YouTube account?
I
I guess
do.
you
I can
just
post it on
upload.
YouTube.
Okay,
I,
yeah,
I
you
can
can post
post
it
it on
on YouTube.
YouTube, and then what you would do is get a YouTube recorder. That's free
Hmm.
online. YouTube downloader. You just type in YouTube
Right.
downloader, get the link, save it. Let me know when it's ready, and I'll take it off YouTube.
Okay, cool. Yeah, we just send me the link once it's up, and
I'll
I'll
post
do
it
it. I
right
already
now.
have a YouTube download, so
Oh, perfect. All right, I'll post it. Let me know when it's ready on Instagram. Just type me and say, "Hey, it's ready," because I don't want to have all this up online either. So you just let me
okay.
know.
Okay, cool. All right,
Elijah,
yeah. So I'm
we're always available. So any questions? I mean, we'll keep in touch and stuff. Going forward. Any questions at all? Just feel free to hit any of us up.
oh,
You can find me on IG Liam Capital and
okay.
Twitter Liam Capital at Liam Capital One. We'll keep in touch, man. We're here to help. That's all we're here to do.
Yeah,
And
man.
we literally
Absolutely.
live and breathe this. That's all we
This is
do.
what we do. All right,
All
man.
right,
It was
great.
a real pleasure,
I'm
Elijah, man. I hope this was
Yeah,
very
great session.
informative.
Yeah, it was. I actually definitely would like to look. I actually look forward to working with both of you because I feel like I can make a lot of money. So
Yeah,
Yeah,
man.
man.
Definitely.
Great stuff. Let's profit. Let's profit. Let's make
Yeah,
this money.
yeah, we only got two options: broker wealth. So
you got it, buddy.
Exactly. Beautiful. Have a good night, guys, or good morning
All right. Have a
to
good
all
one,
right,
Elijah.
guys. All right. I'll
all
post
right,
Have a
this
good
same
right
to
one.
you
now,
guys.
Elijah.
Okay,
The
cool.
YouTube is at is GAR Capital.
Okay, same as your Instagram name.
You got it. Yep.
Take it
Okay,
easy, guys.
all
All right,
right.
everyone.
Thank you.
Have a good night, everybody.
All right.
Later.